Hello, and thank you very much for listening to this presentation. With me, I have two colleagues, Matt Fessler from Lincoln Financial Group and Kevin Cece from Carson Wealth. Today, we're going to talk about a few critical items within the 401k space, and then from there, explain to you how we can help. As a review, Solex HCM is your provider for payroll services, but we want to make sure that you understand we do other things, including the payroll services. We're known as a human capital management system or consulting firm, and human capital management covers a number of different areas. So for some clients, we help them with an applicant tracking system, electronic new hire onboarding, human resources administration, benefits administration and open enrollment, time and labor management, punching in, punching out, and vacation, PTOs, policies, employee engagement, a platform that helps maintain connectivity to your employees, and a performance management. And performance management being anywhere from just a embedded one directional or 360 directional performance reviews of managers and employees. The next thing that I want to make sure I call out is we have added to our services with a human resource consulting practice. Anything from policies, procedures, from employee issues, hiring, firing. We are able to help you from a consulting standpoint with a wonderful team leader, and she is building out her team to continue to provide services to our clients. What we're talking about today is a multiple employer association plan. It's a 401k, and it's by leveraging the power of a bigger group under Solex's umbrella, we're able to provide a very strong and powerful, simpler, safer, and more cost-effective 401k. So we're going to go into more in depth on that. So I'll leave it at that. And then finally, we are building out a group benefits consulting practice. This is to help some clients who need a broker, need guidance as it relates to health insurance and different insurance plans for their employees. Again, we're very happy to be providing services to you and to be your partner, and we look forward to deepening the relationship throughout the year. I'm going to turn the presentation over to someone that I've been friends with and colleagues with for over a dozen years, Kevin Cece.
Thank you, Dave, very much. And welcome, everyone. Thank you for tuning in today. As Dave said, my name is Kevin Cece. I am the managing partner of Carson Wealth. Carson Wealth has a unique business focus in that we provide financial planning services to over 36,000 households across America. But more importantly, our team leads our workplace retirement plan consulting initiative. We're based in Foxborough, Massachusetts. I come to the team as the founding partner of the Workplace Retirement Plan Consulting Division. I have 25 years of experience in working with defined benefit plans, defined contribution plans, working with companies in their charitable endeavors. And we're really, really happy to partner with Solex to build out, as Dave put it, a simpler, safer, and more cost-effective retirement plan. When people say, "What do you do, Kevin?" I say, "I solve problems for small to mid-sized businesses." And they say, "Well, tell me more about that." And then usually what we tell them is we refer to ourselves as the librarian. There's so much information, you can't remember everything in a book, but a librarian has the resources to go find the results that someone is looking for. So when we work in partnership with Solex, we're really focusing on what we call the 4 pillars of plan consulting. We do not do administrative work as a TPA, but our team, myself included, all of our principal consultants have over 25 years of expert experience in working on plan design, administration, and compliance review. So we're kind of like a second set of eyes in reviewing everybody's plan document, plan provisions, and benchmarking those to make sure they still meet the objectives. We work to benchmark the costs associated with all of our plans that we consult on to make sure that the owners and the executive management team and the people signing the 5500s, who are all fiduciaries, are not opening themselves up to any liability, real or perceived. We also complete comprehensive investment due diligence to make sure that those are high quality investments that meet rigorous standards of prudence. And last but not least, sometimes most often overlooked, is helping people save and invest wisely so that they can have a dignified retirement. So these are all the areas that we focus on in working with clients long term. But again, most importantly, it's about helping people understand what you have, why you have it, and removing pain points associated with those plans. Now, for the any client that has to work in a highly regulated environment, there's our important disclosures. So what I would like to do now is transition the dialogue over to Matt Fessler. Matt is our strategic partner on the investment side of the house at Lincoln Financial, and he is part of the glue that puts together the 401k value proposition at Solex HCM. So Matt, if you could go ahead and get started and talk about what the Cycle 3 restatement is and how you work with Solex and our team, that would be wonderful.
Awesome. Thank you, Kevin, and thank you, Dave, for the opportunity to present here. Again, just so everybody knows, my name is Matt Fessler. I'm with Lincoln Financial Group here. I'm one of our regional sales directors. And yeah, just wanted to present very briefly this topic that's very timely here in 2022 that affects retirement plans across the country with plan restatement. So what I'm going to cover is, what is plan restatement, actions for you to consider, opportunities to really update your plan design, and really how Kevin's team can assist with that. And then lastly, overall, just how Carson Wealth and my firm, Lincoln Financial Group, can help you with making adjustments with your retirement plan and potentially improving it. So what is plan restatement cycle, right? What is this? If you have a pen and paper, I'd ask you to take it out here just to kind of take a couple of notes. But since the laws and regulations overseeing 401k plans and 403 plans, retirement plans in general, are constantly changing, the IRS requires periodic updates to your plan document. So the thing to know is that every 6 years, the IRS requires every company that offers a retirement plan to restate their plan document. And we actually, this year in 2022, are in that 6th year. We just happen to be in that. And they give businesses a 2-year restatement period. And the date to know and maybe write down is, that you see it on the right-hand side, is July 31st. July 31st is a big date to know. By July 31st of 2022, we're going through what's called Cycle 3, and it's mandatory that your plan gets restated, right? And if you don't restate it, when you deal with the IRS and don't do what they say, there can be penalties, right? Or even loss of a tax-favored status. So it's very important to make sure that you get your plan restated in 2022. And the good news is that our firm at Lincoln Financial Group, Kevin's firm at Carson Wealth, we can assist you in making sure that your plan gets restated in a timely fashion. So in terms of why you want to get the plan restated or what it's about, there's really 3 key elements that are going into this Cycle 3 plan restatement. The first is that because of the Secure Act, CARES Act that was passed, we're looking at hardship distributions and making sure that the proper changes that the government made in 2020 and 2021 are in your plan document. So hardship distributions are one of the things that's made in the new plan documents. Mid-year reductions or systematic reductions to your safe harbor, right? There's a lot of different flexibility with plan design that needs to be written into your plan document to make your offering a little bit more flexible. Also accounting for rollovers, particularly Roth rollovers. That's another key component to the plan restatement. So again, some technical things that we'll help you out with, but very important to make sure that these options are available in your 401k plan document. So in terms of actions to consider, it's an ideal opportunity for you when you go through this plan restatement to thoughtfully consider not only the plan document, but really how your 401k plan has been progressing over the last 3 to 4 to 5 years. Because besides the government making changes like they do constantly at the IRS, we also look at how the investments are doing. As Kevin mentioned, the market's done very well, over the last 3 to 4 years, and it's a perfect time to reevaluate your plan. Maybe get a fresh look of eyes to benchmark, how the investments are doing, how your record-keeping platform is performing and the cost structure. And we can all do that from a complementary standpoint with our relationship with Solex. So that's something there that we can help out with.
So Matt, just quick question, and I know that we're going to have a Q&A, but I think it's important to stress. So if I set up a 401k plan for my company 3 years ago, does that mean that I have 3 more years before I have to restate, or is it a 6-year cycle regardless of when I created my 401k plan?
It's a great question, Dave. So the government wants to make sure in this cycle 3 that your plan gets you had a 2-year time frame where your plan would get restated. So in your example, if you did it 3 years ago, you would actually still have to get your plan restated to make sure that you had it done. So even newer plans, yes, it's important that you get that done. So if your current financial advisor or TPA or whoever prepares your 5500 hasn't approached you yet in 2022 to restate your document, please reach out to us. Reach out to Kevin, and we'd love to set up some time just to make sure that your plan document does get restated, and that we can do some of these other complementary services to make sure your plan is set up.
And sorry, I got one more. So
Yes.
when if I'm with XYZ TPA or retirement plan, what have you seen as the general cost that these types of companies require to restate a plan document?
Yes. So the cost to restate the plan document can be anywhere from $1,500 to $3,000.
Mm-hmm.
And as if you looked at the benefits of potentially joining the Solex 401k program, we take and you looked at the benefits of joining it and you saw the value of it, we would actually cover that cost to restate your plan document for you. It's part of our package that we offer. So it's a great value that we have available in the program to cover that plan restatement cost.
Thank you.
Oh, great questions. Next slide. So just to kind of end here, opportunities for your 401k, right? This is, again, like when we usually see this 6-year plan restatement come up, it's usually a time where local business groups really take advantage of the restatement to say, let's look at our plan document, make sure we add the new provisions into our document, but let's also look at how have the demographics of our plan changed over this last 6 years or 3 years. Is there a way for us to maybe get 2 or 3 different plan design options to maybe benefit our plan structure and our benefit structure? So, you look at the provisions for restatement, you look at plan design, and then also looking at cost, right? So this is usually every 6 years when sometimes companies come together and say, let's take an hour, let's figure out if there's changes we can make, whether it's with fees, with design, and also making sure that we follow the government's rules and restate the document. So we can help you do that here. And what we'd ask you to do is reach out to Kevin and his team. And again, they could set up some time just to kind of make sure that your plan is set up correctly for 2022 and that you meet the deadline of July 31st to make sure your plan gets restated.
And before we move on to this, I think the question that I would have maybe for Kevin is, if I set up a 401k plan, again, maybe 3 or 4 years ago, and I haven't really done anything to it, how often should I look at the investments? I mean, what should I be doing? I don't even know what the baseline should be.
That's a great question, Dave. So oftentimes people will buy 401k plans under the premise that somebody else is doing all of the work. So any provider, I won't name names because we're agnostic. We want to make sure clients have the right fit. But if you think about any major provider of 401k plans in the marketplace today, generally speaking, they're trying to recommend, more often than not, proprietary investments, which has an inherent conflict of interest. There's been lots of litigation around plan sponsors being sued by employees where the funds that are in the plan were either not the lowest cost share class available, or they were accused of not being knowledgeable and knowing that there were better, lower cost plan investments available to them. So even if you have an outsourced investment fiduciary, and that investment fiduciary is the 401k company itself, or you have a financial advisor that is monitoring your investments for you, you as a plan sponsor are always going to be responsible for making sure that that outsourced fiduciary has the skill and experience to follow prudent expert rules. So if any of that sounds completely foreign to you, it would behoove you to revisit who's monitoring your investments. Are they still prudent? Are the costs reasonable? And how do those specific investments best benefit the plan and the participants? So typically at our firm, we will help curate the most appropriate investments, monitor them on a quarterly basis. And if a fund falls off of its kind of in favor status, we will work with the plan sponsor to either put it on a watch list or remove it. And the level of involvement from the plan sponsor can be very de minimis, or they can outsource that altogether. But much like you're required to pay attention to your plan investments, you should be benchmarking your expenses associated with plan operation at least every 3 years. And the greatest example I provide to people is, when was the last time you looked at your cable bill or your cell phone bill? And if it's been a couple of years, you're probably going to be surprised to see how those costs keep creeping up. And lo and behold, it's a great opportunity to potentially use the Cycle 3 restatement as a way to modernize not only the legal plan document, but to potentially modernize all facets of the plan through this collaborative effort with our team, Solex and Lincoln, and to keep it simpler and keep it safer and make it obviously much more cost effective. So every plan sponsor has fiduciary duties, even if they think they have insurance to cover that. So it's very, very important people understand some of these basics and provide good old-fashioned due diligence on the investments in the plan every single year.
Awesome. And Kevin, I think the final question that I would have for you is, this program specifically that we're talking about in partnership with Lincoln, your group is called a 316 fiduciary advisor. What is that, and how does that help the Solex clients?
Yeah, that's a great point. So what we've built with Lincoln and Solex is a state-of-the-art program that allows us to outsource many of the pain points that small to mid-market companies face. And the most important pain point is what we would like to refer to as payroll and 401k integration. And if you're looking on the screen, it's the bullet point in the lower right-hand corner. As a small business owner myself, does it take a lot of time to remit contributions to the 401k plan? No, not really, but it's just something I would expect from a technological deliverable today, that I wouldn't have to do it, and I certainly wouldn't want to do it. So we've built a really, really robust solution that allows Solex HCM clients who are using our Lincoln program to basically eliminate any and all lifting in terms of getting data to and from the 401k plan out of the iSolve system. So that's kind of one of the major pain points for small to mid-market businesses. The other pain points that people typically don't want to here is, oh, I got my 5500 filing coming up, or there's too many administrative duties. So what we've built through the Lincoln program is something called 316 administration. And what that means is they will absolve the plan sponsor from any and all liability around administrative errors associated with the plan, which is huge. Typically speaking, plans are not faced with major issues around investments in many regards with smaller businesses. Where the problems come from is there was a failed discrimination test. The 5500 was sent to the owner, CFO, or HR director. They assumed it was correct. They signed it because their TPA said, here's your 5500. And lo and behold, under an audit, it was done incorrectly, which creates a whole host of issues. So we have this what's called 316 administrative package, which is a total outsourced solution on all of the pain points for administering a small market to mid-market retirement plan. And kind of the icing on the cake is, our team at Carson Wealth provides a full fiduciary relief on selecting, monitoring, and replacing plan investments. And that's how we effectively came up with this trifecta idea of simpler, safer, and more cost-effective.
Wonderful. Matt, any final thoughts on either the restatement or Lincoln in general and how Lincoln is helping?
Yeah, no, just to kind of close it out, I think Kevin did a great job, a beautiful job of kind of summarizing just how we've really automated and integrated as much of the pain points that local businesses deal with. Yeah, again, I just think with Lincoln, what you get is the same type of approach with my team. We are a high tech, high touch type service model. So we deal 80% of our local businesses that we deal with are in that $20 million and under range for plans. So we really cater to local businesses. We're an American-based company here at Lincoln. And again, we're here to help out as much as we can to kind of help guide plan sponsors to get their answers. And I think that the continuity that we have with Solex, with Carson Wealth has really been a good synergy to work together. But again, I think this is very timely as we are in quarter number one to get this out to people. And again, please reach out to Kevin and his team if you do have questions on the restatement period that we're going through with cycle 3, because obviously there's a lot of things to kind of help out with here.
I would just add one final comment on the cycle 3 restatement. For the clients that we're working with and clients that we're actively in talks with around cycle 3 restatement, this is a legitimate opportunity for the TPAs and administrative companies to drive revenue. They love cycle 3 restatement because they can blame the IRS for a money grab on sending out invoices to clients that they are stuck paying. And in order to scale that and do that for hundreds or thousands of clients at one time, and everybody that is in the administration of these plans is way behind the 8 ball, they send out a DocuSign that says, here's your plan document, sign it and send it back. And our thought process is whether you're paying $1,000, $2,000, or $3,500 for your restatement, isn't that worth at least an hour or 90 minutes of your time with your partners to find out, is what you have still relevant? Does it still meet your business objectives? And what is going on in the marketplace consistent with other firms that you're competing with for either recruiting or retaining key talent? So this is a great opportunity to take advantage of that, but the clock is ticking, and we would certainly welcome any and all opportunity to explore it further with you.
Dynamite. I appreciate your time, Matt, and your time, Kevin. And I would end the webinar here by just reemphasizing, at Solex, we are branching out more and more to be a consulting firm that can help you to improve the efficiency of your business. Make sure that you are able to cover more things, keep your talent happy, recruit great talent, but also manage expenses. We appreciate your partnership. We appreciate your business, and we thank you for attending and listening in today.